Hello traders, Gary Wagner here. It is 12:15 in Honolulu, 6:15 in New York on Monday, 22nd day of August 2022, and this is the daily report for gold and silver. For the last 6 consecutive trading days, gold has formed a red candle, which simply means that it closed below its opening price. On each of these 6 days, we saw gold trade to a lower low than the prior day and a lower high than the prior day. That is exactly what occurred today, with gold giving up $13.50. It opened at $1,760.60, traded to low of $1,740, and is currently trading at $1,749. It did, in essence, fill the gap that was created back in July. We'll talk about that during our chart section of today's show. Most of today's decline was directly due to dollar strength. The dollar is at 108.90. It is the highest close that we've had in over 20 years. It effectively beat out the close that came in July because we had a high there, but not a closing price there. Silver also had a strong decline today of almost a full percentage point. After giving up 18.5 cents, September silver is now fixed at $18.88.5. As you know, we have been looking for a proper entry price for our next trade, and in essence, what we were waiting for was the possibility that the gap that was created at the end of July, when the August contract expired and the new most active contract became the December contract, and that occurred right here. Of course, on Friday, prices moved into the top of the gap, but the gap was completely filled today when we had lower pricing actually going below that. Currently, we have gold trading at $1,748.60. We apologize for the typos, but we did send out a trade alert this morning to enter a long position in gold futures. We got in at $1,747. We placed our stop at $1,734. The reason for placing our stop at $1,734 was to put it well below the low of the day and below the gap itself. I have just drawn in a horizontal line representing where our current stop is, which is $1,734, and the fact that we were trying to put it at the bottom end of this range, the range being the candle that was created that formed the bottom of the gap. Assuming that this trade does move in our anticipated direction, which is to move back up now that the gap has been filled, our exit strategy is what we'll look at throughout the week. But I believe that we could see gold on this single leg of a rally move and take out this recent top. And of course, this top comes in just below $1,830. And traders, the key to this current trade has got to be dollar strength or weakness. Of course, recently we have seen immense dollar strength. Even on a daily chart, look at the size of these moves over the last 3 days. They're approximately 0.75% to 1% each day, meaning Thursday, Friday, as well as today. More importantly, when we look at the most recent top in the market, that came in at 109.04. We traded just shy of that today, but even on that day, back in the middle of July, the dollar itself did not close near the highs, and in fact closed lower to 108.50. So we are at a high that we have not seen in quite some time, and to look at that point, we need to convert our daily chart to a weekly or monthly. Traders, as you can see, I have converted our daily into a monthly chart, and we can see the last time that the dollar traded at this level, this was on the way down or during a corrective period, and that occurred approximately 2003 and 2004. But in an uptrend, the last time we have seen the dollar have this kind of strength was around the year 2000. It is also noteworthy that we see that as it moved up to these highs here, we did have a lull in which this particular price point of 109 served as an area of support, and here it served as an area of resistance, which is why I believe that there is a decent probability that we will see the dollar reverse, even if it is only a short-term correction. Our recommendation is to maintain your current long position of December gold at 1747 and to maintain your current stop at 1734. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.